The era of the billion-dollar dog coin is over. As we enter the pivotal landscape of 2026, the markets have reached a saturation point where pure speculation is no longer rewarded by institutional liquidity. This isn't just a correction, it is a fundamental Darwinian shift. While retail investors previously chased the next viral mascot, the global financial engine has quietly pivoted toward assets that provide tangible, predictable yield. We are witnessing the systematic deconstruction of hype-driven cycles. Today, smart money is abandoning the ephemeral for the enduring, demanding that every digital token represent a fraction of a productive physical reality. The question is no longer about which coin will moon tomorrow, but
behind the scenes, a silent massacre is occurring in the crypto rankings. The projects that once promised astronomical gains through community momentum are now bleeding into obscurity. Why? Because the modern investor has evolved to prioritize real-world yield over speculative fervor. In this new landscape, the absence of underlying cash flow is a death sentence. We are seeing a massive rotation of capital into tokens backed by audited, income-generating assets. This transformation is driven by the realization that the true power of blockchain lies not in creating new currencies out of thin air, but in optimizing the assets we already own. As the speculative fog lifts, a massive $19.3 billion vacuum is being filled by the bridge between the legacy financial system and the decentralized future is finally complete. We have entered the era of the $19.3 billion tokenization pivot. This is no longer a theoretical experiment or a niche interest for tech enthusiasts. It is a full-scale migration of the global economy. By converting physical assets into digital tokens, we are unlocking liquidity that has been trapped for decades. Imagine the friction of a real estate transaction being reduced to the speed of a text message. This massive capital influx is redefining the very concept of ownership. As billions flow into these protocols, the barrier between a Manhattan skyscraper and your digital wallet is dissolving. Real estate has long been the ultimate trophy for the wealthy, but its illiquidity was a structural flaw. Tokenization is fixing that by breaking massive commercial properties into millions of digital fragments. For the first time, a teacher in Seoul can own a fraction of a premier London office building, receiving rental income directly to their on-chain account. This isn't a dream, it's happening at record speeds. Developers are bypassing traditional banks to raise capital through global, decentralized networks. By removing the middlemen who once ate 20% of the profit, blockchain technology is democratizing the most stable asset class on Earth. This migration represents a tectonic shift in how we build, buy, and benefit from the physical world around us through fractionalized ownership. The numbers tell a story of exponential growth that the mainstream media is largely ignoring. The real-world asset market has tripled in value since last year, surpassing the monumental $19.3 billion milestone. This growth isn't fueled by retail FOMO, but by systematic integration by family offices and sovereign wealth funds. They are seeking the transparency and instant settlement that only a distributed ledger can provide. As these traditional giants move their holdings on-chain, the volatility that once defined the crypto market is being dampened by the stability of hard assets. We are watching the birth of a hybrid financial system where the efficiency of the internet finally meets the security of. Beyond property, the backbone of the global economy, government bonds, is being tokenized at an unprecedented pace. T-bills, once locked in slow, archaic settlement systems, are now flowing through liquid 24/7 markets. This shift allows investors to earn the safety of sovereign debt with the agility of a decentralized exchange. It is the ultimate hedge against volatility. These tokenized bonds serve as the high-quality collateral that will power the next generation of credit markets. By bringing trillions of dollars in debt instruments onto the blockchain, we are creating a more transparent and efficient global credit system. This isn't just about moving money. It is about rewriting the plumbing of global finance to ensure that capital always flows to. We are currently witnessing an institutional stampede as the world's largest asset managers recognize that blockchain is the superior technology for record-keeping. The transition is moving from if to when, as regulatory frameworks finally provide the clarity needed for big banks to dive in. This isn't just about efficiency, it's about a total overhaul of the investor experience.
By stripping away layers of bureaucracy, tokenization allows for near-instant distributions of dividends and interest. This shift is creating an on-chain economy that is far more resilient and inclusive than the legacy one. As the gates open, the distinction between crypto and finance is disappearing entirely, replaced by a singular, unified digital market that operates without borders. As the race for dominance intensifies, we enter the protocol wars, where the technical architecture of the blockchain determines its institutional fate. The battle lines are drawn between speed and security. On one side, we have the established titan, Ethereum, which offers unparalleled security and a deep ecosystem of institutional trust. On the other, we see the high-performance challenger, Solana, which prioritizes throughput and low latency. For tokenized assets that require high-frequency trading or massive scale, the underlying infrastructure is everything. This is a high-stakes competition to become the global settlement layer for trillions of dollars. Every upgrade, every patch, and every consensus mechanism change. Solana is currently preparing for its massive Alpenglow upgrade, a technical overhaul designed to solidify its position as the world's fastest transaction engine. This isn't just about speed, it's about reliability for institutional users who cannot afford a single second of downtime. Alpenglow introduces advanced localized fee markets and enhanced validator efficiency, making it the ideal home for high-volume RWA protocols. By solving the throughput bottlenecks that have plagued other networks, Solana is positioning itself as the high-speed rail of the financial world. As it scales to handle millions of transactions per second, it becomes the logical choice for payment networks and real-time settlement engines. The Alpenglow era marks.
While Solana targets speed, Ethereum is leaning into its role as the most secure and entrenched institutional settlement layer. Its L2 scaling roadmap is designed to create a fortress of liquidity that is nearly impossible to displace. Major financial institutions like BlackRock have already chosen Ethereum for their first tokenized funds, citing its proven track record and decentralization. Ethereum's moat isn't just technical, it is psychological and regulatory. It is the network that regulators feel most comfortable with, and that trust is a commodity more valuable than speed in the world of high finance. As the protocol wars rage on, Ethereum's strategy is clear: provide the ultimate security for the world's most significant assets, ensuring that when a nation-state. Behind the scenes, the giants of the traditional payment world are already integrating. Companies like Western Union are no longer viewing blockchain as a threat, but as the engine for their next century of business. They are secretly testing and integrating stablecoin and RWA protocols to revolutionize cross-border remittances. By utilizing the speed of networks like Solana and the security of Ethereum, these legacy networks can settle payments in seconds rather than days, all while drastically reducing costs. This shadow integration is the final piece of the puzzle. When the world's oldest money movers adopt the newest technology, the transformation becomes irreversible. We are moving toward a world where your money. As we look toward the horizon of 2026, the era of pure speculation has officially ended, giving way to the era of global utility. The $19.3 billion we see today is just the first drop in an ocean of upcoming liquidity. The projects that survived the Great Reckoning are those that built the bridges between the old world and the new. In this future, the crypto label will fade, and we will simply refer to it as the modern financial system. Investors who focused on fundamentals and institutional adoption are now the architects of this new economy. The tokenization of everything is no longer a prediction, it is our current reality. The pivot is complete, the infrastructure is ready,